Normally, Toronto is a busy, vibrant city. It's Canada's hub for finance, tech, healthcare, entertainment, and home to world-class universities. But COVID has forced all of us to be locked up at home. Instead of working in offices, we're now working from home. The entertainment industry is temporarily shut down. Universities closed their doors and moved online. So that vibrant city that we all love has been gone for over a year. And the end result of this is that many people have decided that they don't need to live in core Toronto, at least temporarily, and this has taken a huge hit on the rental market in Toronto over the last year. Fortunately, things won't stay closed forever. Right now, 3/4 of Ontarians have gotten their first vaccine dose and almost a quarter their second, so we're hopeful that things will recover soon. A simple, educated guess will tell us that once entertainment, schools, and offices reopen, renters will start coming back and the rental market in Toronto will make a rebound. But the big question is, will things go back to exactly how it was like before, or did COVID cause any permanent changes to the Toronto rental market for good? In this video, let's give our Toronto rental market a closer look. Who are our renters? How have their behaviors changed during COVID? And what will they do once things start to recover? If you like this kind of content, remember to hit the thumbs up button and don't forget to subscribe to our channel to see more videos like this made specifically for real estate investors in Toronto. Let's rewind and go back to the start of 2020 before COVID hit the world hard. Toronto rental properties were looking great. Rents increased by 6.8% between 2019 and 2020. Vacancies were close to zero. Toronto's population was expected to grow by another 139,000 people, and Rentals.ca predicted that rents were going to jump by another 7% in 2020. Toronto's rental market had been doing great. So who are all these people that have been renting in Toronto? Let's split the rental group into 5 distinct segments. First, we have our student renters who are here for university. Now, students typically have a tighter budget and a lot of them like to live together as friends and choose more affordable options like a whole house with a few rooms. Another big group of renters are our young professional white-collar workers. Your bankers, lawyers, consultants, techies, and many of their offices are in downtown. Now, once they got off work, their entertainment was also primarily downtown. We're talking ball games, bars, restaurants, clubs, concerts, events. So it just made total sense for them to rent in the core, close to work and close to play, and they primarily rented condos because it's nicer, it had extra amenities, and it didn't matter much that their place was smaller because they simply didn't spend too much time at home. Next, we have our blue-collar workers. A lot of entertainment and retail are in the core, so these workers also need to live there. We also have another group, new immigrants who move here because they're attracted to our vibrant city. These people will want to live in Toronto when they come, not Barrie, Bradford, or Brantford. Both of these groups tend to rent an apartment or share a house, which are more affordable options. And similar to office workers, they spend a lot of time at work, so they also don't need a big place to live in either. Finally, we have families who also rent in the core, and the reason they choose to live in the core is because the parents need to live here close to work. Families are bigger, kids like to run around, so they tend to prefer houses with more rooms and a backyard. Now that we're more than a year into life with COVID, we know what happened to our renters. The shutdown meant that renters who could move back home did. We're talking students since they can do online class anywhere, entertainment and retail workers since there's no work, and even office workers who can work from home. Some workers who couldn't move back home opted for more space and took advantage of low interest rates to buy a house in the suburbs mainly because they were priced out of Toronto. This caused a huge boom in property prices in the suburbs, and there's a term for this now, the bubble contagion, where real estate price growth is correlated to the distance from the core. Basically, the further a property is away from the core, the higher price growth has been over the past year, and it's reaching a point where it's a little bit irrational now, with more froth at the edges, which means that these suburbs have a higher risk of slowdown moving forward. If you want to learn more about what happened, watch this video afterwards. Immigration also declined drastically over the past year, and we're hitting immigration lows that have not been seen since the 80s. It's not that Toronto is no longer attractive, but when you have COVID processing delays combined with closed borders, it's a simple recipe for population growth slowdown, which takes down rental demand growth with it. The renters that haven't changed as much are families and a majority of blue-collar workers, construction, cleaners, their admin, and designers. Even though these people have stayed in the core, we did notice a shifting focus towards larger units, especially in the blue-collar worker group, and this is simply because renters don't want to be isolated by themselves and would rather live with friends. According to TorontoRentals.ca, you can see that the price of larger units in Toronto continued to rise during COVID, whereas smaller units declined in price. Now that we know what happened to renters during COVID, let's shift gears and talk about what might happen as we recover. A simple answer is yes, renters will come back and the rental market will pick up again. U of T says that most of their courses will be in person starting September. Ryerson and York are easing in a little bit more slowly with a hybrid online and in-person learning program. We're eventually going to see entertainment, malls, restaurants, and events come back, which will bring back their workers as well. Immigration will slowly come back too. And as a general forecast, Rentals.ca expects fall 2021 to be a busy season for landlords and will continue to see rental growth month on month in Toronto from this point on. Another company, TorontoRentals.com, predicts 13 to 14% increases to average rents in Toronto in 2022. Now, here's where I think things might change. The reality is that most offices will still be a thing, although it won't be like how it was like before. We actually did a poll a few weeks back on Instagram and asked our followers how many days they think they will work in the office each week. The response was that most expect a hybrid model. So instead of going back to the office 5 days a week, our followers expect to spend 2 to 3 days in the office. And guess what? That's pretty much in line with a lot of company announcements in recent weeks. And it's true, 2 to 3 days in the office plus being close to all the entertainment action is enough for white-collar young professionals to move back to the core. However, because they might still be working at home 50% of the time, there might be a long-term change where they will prefer larger homes. On top of the change to the work situation, another long-term change is the lingering fear of isolation in the back of everyone's minds. Earlier, I talked about blue-collar workers wanting to live in houses, even though their work situation hasn't really changed, simply because they didn't want to live alone. Now, I believe this mentality will trickle down to the rest of the renters as they head back to renting in the core as well. So, based on all the things that I just talked about, I see 3 main themes in Toronto investment properties in the short to medium term. Number 1, yes, we do expect rent yields in core Toronto to go up across the board, no matter if you're looking at condos, apartments, or houses, simply driven by higher demand. Rents were down 15 to 20% in Toronto core, so we expect things to recover back in the next 1 to 2 years. As a real estate investor, if you want to optimize your returns, you can try to strategically choose more transient renters so that you can better capture market rents. The second thing is that there might be a long-term reshuffling of preferences. Demand for condos and apartments will be lower than it used to be, and houses will be more popular for the next while. Now, freeholds already have the best rent yields, but now we expect to see even higher rent price growth relative to condos and apartments as well. When you have better rent yields and faster rent growth, this will attract more attention from investors. When investors ask us about timing to capture the best growth potential, we do believe that there will continue to be more investor demand in the Toronto freehold market, which will mean that Toronto freehold appreciation will outperform the general Toronto market in the medium term. But we also stand by the saying, time in the market is better than timing the market. So if you're ready, Toronto real estate is a great place to park your money and grow your money for the long term regardless, and we're happy to help you out. Our Elevate team can help you analyze the market, buy the best opportunity, lease and manage your investment property, and we can also help with portfolio review when you're ready to grow. Just reach out to us by heading to the link I'll put in the description below. Don't forget to give this video a thumbs up and look for us on Facebook, Instagram, or LinkedIn if you want to hear from us more regularly. That's all for today. I wish you all the best in your real estate investing journey. Thanks so much for watching, and I'll see you in the next video. Bye!